Good morning, welcome to CATEX TV. My name is Frank Fortunato. Today is Thursday, October 3rd, 2013. If you're a radio listener and wish to watch the show, please go to www.catex.com. An Embraer 120, a twin-engine turboprop plane, went down this morning shortly after takeoff from the main airport in Lagos, Nigeria. The plane had 27 people on board. There's at least 9 people known dead at this point. The plane apparently failed to obtain the necessary lift after takeoff and crashed into a toll plaza very near the fuel depot for the main airport. Oddly enough, the plane had on board the coffin with the body in it of a former governor of a Nigerian state that was being brought home for a funeral. The plane belonged to Associated Airlines. It was flying from Lagos to Akure in Ondo State. It was on a charter flight. The European Union announced a final delay. They're saying it's a final delay to Solvency II implementation. They've now pushed it back to January 2016. S2 had been expected to start in January of 2014. In announcing the decision, the EU Commissioner for Internal Markets and Services, Michel Barnier, said that the decision had been reached only after assurances from the EU Council and Parliament that they would not further change the application date. The move follows speculation from both KPMG and Standard & Poor's that the delay would be likely. Solvency II, of course, is the overall European structure for better regulating dynamic capital in the insurance, reinsurance, and banking industry. It's been a little bit of a hornet's nest for quite some time. Yesterday, in surprising news, Moody's, the rating services, downgraded Bermudian insurer and reinsurer Endurance. They took them down to an A3 from A2. Endurance, of course, has been in the news this year because John Charman has taken the company over as the CEO and chairman of the board, and they responded quite angrily to the downgrade. Financial CFO Michael McGuire said, "We're extremely disappointed and puzzled by Moody's decision to downgrade the ratings of Endurance, in spite of the demonstrable improvements that have taken place over the last 18 months. Went on to say the capital levels are higher, leverage is lower, cat exposure has been significantly reduced, and the leadership and management of the company have been significantly enhanced. These are not the traits of a company with a deteriorated credit profile, and it would appear that these improvements have been completely disregarded by Moody's in their rating process." No word yet from Moody's, and no word yet on Standard & Poor's or AM Best whether or not they'll follow suit. Well, we've been talking for a couple of days now about some anticipated remarks coming from the British regulator of the insurance industry, the so-called Prudential Regulatory Authority. Nobody quite imagined that this headline would pop up this morning. Britain will not intervene in catastrophe bond market for now. Oh my goodness. British regulators apparently see no case for intervening now to stop a wave of money moving into the insurance-linked securities market, such as cat bonds. They said that the trend should not be overstated. They noted that these alternative structures have been in the marketplace for over 20 years, so it's hardly a new phenomenon. And they noted that the cat bonds and the flood of money coming into insurance-linked securities have been largely confined so far to North American catastrophe risk. I think they had better read the current trade press that's quickly expanding out to all sorts of other risk. The Prudential Regulatory Authority spokesman said that intervention would be considered if the capital influx was bumping up leverage in the system overall, and action could include forcing firms to hold more capital or changes to collateral requirements. This is going to be very interesting, actually. They're going a little bit in a different direction as to what the common trend is at the moment. It's been another tragedy off the Sicilian island of Lampedusa. Lampedusa is closer to Africa than to the Italian mainland. Another ship has capsized as African refugees try to reach the European Union. This time, some 94 people have drowned. On Monday, 13 more drowned when a ship capsized only a few meters from the shore. There was a fire in Seattle yesterday, actually, in a Tesla car. And that Tesla electric car fire apparently did begin, according to Tesla, in the vehicle's battery pack. Company spokesperson said that the impact of the fire on Tuesday was caused by a large metallic object in a crash that directly hit one of the battery pack's modules in the Model S. Shares of Tesla Motors dropped 6% yesterday after an internet video appeared showing flames spewing from the vehicle. Tesla has touted the car as the safest vehicle in America. The liquid-cooled battery is a lithium-ion battery, similar, of course, to the battery used in laptop computers, mobile phones, and yes, indeed, the Boeing 787. Obviously, people are watching this very carefully. The government of the United States is in day 3 of its shutdown, and now the focus has begun to look at what could happen on October 17th, when the Treasury Department says Congress has to raise the debt limit. If they don't raise the debt limit, the United States will not be able to pay its bills and could be in default. Wall Street is watching this very closely. Last night at 5:30 p.m. in a discussion at the White House with President Obama, congressional leaders were unable to resolve the current impasse, and what's coming in mid-October is much, much bigger. Market analysts say investors will hit the panic button on October 18th if the debt ceiling has not been raised by then. The market will force the hand of Congress. There are precedents for this. After the House rejected the initial legislation authorizing the Troubled Asset Relief Program during the financial crisis of '08, the Dow Jones Industrial Average dropped 700 points in one day. The next day, the House passed the bill. So buckle up your 401ks. It probably is going to happen again. And here's an interesting story. Swarms of aggressive hornets in their fall mating season are inflicting a deadly toll in a central Chinese province. Thus far, 42 people have died of hornet stings in 3 cities in Shanxi province. The hornets have now stung over 600 people. The venom that the human body receives after a hornet sting leads to multiple organ failure, and unless immediately arrested by dialysis and various operations, the people are essentially doomed. The hornets are about 4.5 inches in length. They're the largest hornets in the world. That's about the size of a human thumb. And of course, the spate of the attacks now is being caused supposedly by unusually dry weather in the area and urbanization, which is spreading into previously rural areas. Once again, the situation in China is causing some changes in the laws of nature. Not really, though, because what's happening is man is encroaching on these areas. That's the news for today. If we have any breaking news, we'll come back and tell you. Thank you for watching.